world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hi, everyone. Thanks for tuning in. Welcome to Rebank. I'm your host, Will Beeson. After working across banking and financial services in the US and continental Europe, I've settled in London, the heart of all things fintech and banking innovation. This podcast is a platform to explore some of the ideas, the thoughts, the trends that I find most interesting, and to get some of the leading thinkers in fintech and banking on and chat through what's going on, what the implications are likely to be for society, how we're going to see things change in the coming years, both in banking and financial services and otherwise, and try to draw some conclusions about what this means for our industry. And definitely reach out, get in touch, tweet at us and the podcast at Rebank Podcast. Look forward to hearing from everyone and enjoy. Quick disclaimer, this interview was recorded right before the bank formerly known as Mondo changed its name. So for the benefit of our listeners, any reference to Mondo can be understood as a reference to Monzo, as the bank is apparently now known. Today I'm thrilled to have Jason Bates, co-founder, on the podcast. Co-founder of what, you ask? Well, where to start? Jason has started 2 challenger banks, Mondo and Starling, a handful of digital consultancies, and a successful social enterprise that helps thousands of young people gain digital skills. In between, he's consulted for Google, taught at Facebook, and separated billion-dollar companies. Jason's most recent company, 11FS, works with organizations across financial services to drive digital transformation and deliver contextual digital banking. You can find Jason on Twitter at Jason Bates, or at 11FS Team. Jason, welcome to Rebank.
Wow, what an intro. Thanks very much.
Great. So we have had the opportunity to connect a number of times in the past, so I have a pretty good sense of what you do, but how would you introduce yourself and how would you characterize some of the work that you're up to at this point?
Sure. So how would I introduce myself? Wow, that's just as you said in the intro. That's changed over the years. But currently, as you said, I'm a co-founder with 11FS. We're a team of fintech operators, I guess, people who've been there and done that, either in large banks or in fintech, or indeed, starting new banks. And we help large financial services organisations actually deliver, new digital propositions. So yeah, really, that's the pitch. There's so much going on in the sector, so much going on in the industry that there's the need for people who have been there to come in and help. I've
read a fair bit about 11FS. I have a decent sense of what your guys' plans are and some of the work that you're doing. But how would you kind of describe the target customer of 11FS, a target project?
Sure. So we've got a really interesting group of people together. We've got David Breer, who, as well as leading the digital sort of transformation of Aviva and Lloyds Banking Group, was head of digital banking globally for Gartner. So he has both an amazing address book, extensive encyclopedic knowledge, and has just really been there and done that across fintech and financial services. We've got Simon Taylor, who led blockchain research globally for Barclays for the last 2 years, who really provides that sort of that future view as to where the basic underlying infrastructure is going to change for financial services. We've got myself, who you've already introduced very well, thank you, and we've got a couple of other guys who have a research background, who have spent probably the last 10 years reviewing and exploring digital propositions for banks across the globe. We've got companies on different continents, retailers, mobile phone operators asking us about, can you come and help us start a new digital bank or digital payments play? We're looking at API use in the African subcontinent. We're doing quite a wide variety of projects at the moment, but yeah, all of them absolutely amazing and super interesting.
Wow, well, it sounds like quite the team. And I guess it all kind of clicks now. You and I guess, originally connected during your Mondo days. And so I'm familiar with your experience first at Starling and then at Mondo. And it was digging into your bio in preparation for this chat that I came across some of the work that you had done in the past with really large-scale kind of change management and digital transformation processes at, I think there were energy companies, which first of all sounds like great prep for the world of banking, because I can't imagine that working in a utilities industry is particularly easy.
Yeah, I tend to kind of break my career down to three parts. There's the consulting piece. I started with Accenture and doing those sort of large IT-driven change programs. Starting in the kind of technical architecture side of consulting, but then rapidly realised that the part that was the most difficult and that really interested me and was almost most critical was the people aspect. Both from a customer perspective, a management perspective, a team perspective. It wasn't the technology that was a problem in a variety of these programs. It was the teams and the organisation to get them into that. So that led to all kinds of projects. I ended up in ventures and alliances, bringing people together to do different things, and then left Accenture to go out on my own and form a small consultancy. And then that led to all kinds of projects around promotions management systems at PepsiCo, quite a lot in utilities where I helped separate UK power networks from EDF, which was absolutely a massive core systems transformation program to change that, which went phenomenally well. And also the separation of Birdseye from Unilever. So I've really seen sort of those big incumbent legacy systems change programs and sort of led them there. But it was during that point, at that time, that I realised that the execs that I was working with really didn't get digital. They didn't get how it had changed customers' lives fundamentally. They didn't get the underlying platforms that digital's built on, or indeed how you really deliver and iterate it, rather than the traditional typical 2-year IT program with waterfall planning and requirements gathering in order to do things. So that really led to the second part of my career around this digital transformations consultancy, which was also a social enterprise, which again was fascinating. How do you really help execs understand digital quickly, get a feel for it, to grok it, so that they can almost forget about it and then focus back on the customer again. And so that led to work with Google and Facebook and Aviva and Sky, and a lot of great work with Barclays and their Digital Eagles program, which is a really inspiring project and program to be in. I've got a lot of respect for those guys. And then sort of following on from that, I had a meeting sort of in a hotel lobby with Anne Bowden, the CEO of Starling, who pitched me this was 3 years ago, I guess, so it seemed a little odd that someone with decades of banking experience and extremely credible would pitch that you could start something that would one day rival HSBC and Barclays potentially. But that's what she pitched, and it was a good pitch. So I essentially left the digital proposition work and the consulting I was doing, and went full on into digital banking.
So Starling was one of the earliest digital challenger banks.
Yeah, well, I think there was a lot of talk. There really is, or was, a very specific window of opportunity where, when you look at it, the regulatory framework of getting a banking license had changed. So suddenly you needed less regulatory capital, and there was a sort of a step-by-step authorizations process that there hadn't been previously. So it was really, the first time in hundreds of years where starting a new bank really became achievable, feasible, without putting potentially £100 million at risk with whether you're likely to get a banking license or not. And that, combined with the digital shift that's happening across the UK, across the world, 75% or something of people have a smartphone. A good proportion of those, I read the other day, I think 50% were checking their smartphone within 15 minutes of them waking up in the morning. So that's not a peripheral device. That's a new platform that's really core to a lot of people's lives. And that, combined with the fact that large incumbents and legacy banks were or are stuck with decades-old systems. I was talking to an international bank last month who told me that they had something like 3,000 systems that ran their bank, and between those 3,000 systems there were 40,000 interfaces. Now, can you imagine trying to do some innovation or to create a new platform around that? That's just a crazy mess. So it really was a combination of those three factors that opened this window that I think a few people went through. Atom, I think, were undeniably first, but now Starling, Tandem, and Mondo really are the four new digital banks to watch that all have their banking license and all be launched. Have already launched or will be launched next year.
Mm-hmm. Well, congrats to you and to your former colleagues at Mondo on their banking license, which they received the past couple weeks.
Yeah, well,
it's huge.
It's a small team, massively talented, and they've worked phenomenally hard for the last 18 months to make that happen, as well as launching a pretty successful alpha and beta program, with hundreds of thousands of people on the waiting list. So they deserve massive respect.
Are you still involved in Mondo at all?
Yeah, I'm still a shareholder. I'm still an avid supporter. I'm not involved day to day, but I'm on call to provide whatever support I can to help Mondo succeed.
Mm-hmm. And do you expect that relationship to continue?
Yes, definitely. I think I think when you start something and pour your heart and soul into it for 18 months in my case. It becomes part of you. It's a creation that that you've had part of building. So I fully hope and expect to be involved and both helping and cheerleading Mondo to success.
Taking a step back and looking at banking more broadly, what are you most excited about in banking right now?
Wow. I think there's three themes that excite me. First is a move away from traditional commodity financial products that everyone recognizes. The very sort of traditional. You used to have your grandparents had a passbook. Your parents got statements. You've probably been looking at the equivalent online on a web page and now on an app. But it's been a digitized process. We've taken something that's very traditional, whether that's a current account, a savings account, a credit card, a loan, and really just replicated it. So it's a little bit like the start of the internet, where newspapers would just essentially put a newspaper on screen and even have like a fake page turning mechanic. We're really in that sort of, we've just digitized it, but no one's seen what a digital bank looks like or truly what digital services are like. So I think that seeing the impact of what real-time, intelligent, connected, contextual services can deliver for retail financial services is amazing. So I see that enabling a whole new world of these intelligent financial services that actually fit much more closely with end customers' lives than they have previously. You log in online to to your current account, and it gives you a balance that's a few days out of date and a statement of semi-cryptic transactions, with 18 characters of text to tell you what you were doing at some day. There's not even a time associated. And then so you get this sort of basic transactional and basic data, but people have to do a lot more in their lives to kind of run their path from paycheck to paycheck. That's a pretty complex journey, with all of the overlapping quarterly, annual, monthly payments, with trying to save for some things, with borrowing for others, with sending money across the globe or to friends after dinner, and people have to work that all out and do that all themselves. Or they don't. They just kind of like put a thing, lick their thumb, put it in the air, and say, well, I'm having a pretty good month, so I think I can afford that. So I think digital provides the capabilities of delivering what traditionally would be the service that you'd get if you were super wealthy and you had a private banker really looking at and looking after your personal finances, and delivering that to a mass market. So I think that's the first thing. The second thing is the push towards PSD2 and APIs. That can't be understated as something that's really going to shake up the industry, and indeed create a new industry around these intelligent financial services connecting together in order to deliver contextual services, wherever the customer needs. So you will be able to go to some point of sale, to buy a laptop online and be able to borrow the money, see if you can afford it, borrow the money for buying it, and potentially insure it at the same time. Now, the ability to pull all those things together to prove who you are and how much you're earning by allowing some third party to connect to your bank, and by connecting into to financial advice services that online in order to help you better manage your finances, is just going to open up a huge area. And then looking further down the line, I've got to say blockchain is really the sort of 5 to 10 year bet. Or it's not even a bet. There's an inevitability. Try and say that word. An inevitability about the changes that that's going to bring to the underlying core fabric of financial services.
There is certainly a lot going on in bank at the moment, and I think you captured it very nicely right there. I guess the immediate question that comes to mind, just picking up on your three areas, it almost seems like on one side you have this move toward real digital banking. I think you put out an interesting article recently called something like "My Bank Already Has an App," which I guess is the response of many incumbent banks or consumers when one starts explaining the merits of a digital app only bank. And I suppose to date, a lot of maybe I don't want to call it misconception, but a lot of the thinking around why a great app is a temporary advantage over, say, an incumbent online or mobile proposition is in part linked to the fact that we've lived in a world of kind of personalization, where you can sign on to online banking, you see your transactions, it's greeting you by name, recognizes you via your username and password, into a world of contextualization. So, a word that you've used a couple times. We actually had a senior data scientist from Accenture on just last week to talk about some of the themes that are impacting data science and where that's likely to go. And his point was the same, that we're starting to see a momentum pick up in this move from personalization to contextualization, and that's really what's going to define the banking experience going forward. It sounds like you would agree with that.
Yeah, it really is that. I think when you look at the virtues or the capabilities of digital, just as I said, the real-time intelligence, the connected nature of APIs and other services, and the capabilities that gives you in context. And then you look at the end customer needs, which arguably haven't changed in quite a long time. You end up at a different place, knowing that these are the capabilities you have. I'm a big fan of the fact that mass market banking and even online banking, has for free. Well, but that's another part of the conversation. But arguably for free, is just an amazing service, and that delivers based on 1970s, 80s, 90s technology. The whole let's print something out and send it to you. But that really is the last generation, and as I've said, that's the digitized world rather than the digital world. So I do think that that when you think about every transaction and every sort of need based around money for end clients, whether they're individuals, SMEs, corporate, transaction, capital markets, to bring real-time intelligence and contextualization to those markets is just something. It just changes the question and changes the answer.
Mm-hmm. You mentioned blockchain as one of the things you're most excited about in banking, and certainly, and we're already starting to see it after years of hype around blockchain technology and how it's going to change the world. We're starting to see some real implementations, proofs of concept at the very least, coming out of the likes of R3, and it was Bank of America, HSBC, and Infocom in Singapore doing some trade finance type work on the blockchain. A lot of the focus currently around blockchain seems to be on efficiency enhancement, cost cutting within incumbent institutions, and potentially in the future some sort of shared archive of KYC or identification information, voter information, either at a bank level or even at a societal level. That's hugely powerful potential. Is there an overlap with the trends in retail banking, or are those kind of separate themes that are affecting different parts of the banking market?
I think inevitably blockchain will bring new capabilities further along the line. But I think it's, I've given talks about Mondo and Starling and digital banking, and inevitably someone asks about, when will we see blockchain in one of these digital banks? And there just isn't the need for it at the moment. In the end, blockchain is a distributed database that protects against tampering. That's my mental model for it, and I'm sure Simon Taylor, who's my sort of co-founder of 11FS, I'm sure he would hold his head in horror. But my mental model is that really we're talking about distributed databases with that are tamper-proof, that then you can layer on smart contracts that enable you to automatically run tamper-proof code on that tamper-proof database that's being shared amongst everyone. So when you look at sort of retail propositions or end customer propositions, we don't really talk about databases now and how they affect the experience, and I don't really think we're going to talk about sort of blockchain and how it affects the experience, but inevitably it will bring some capabilities along that then the next generation of services beyond the real-time, intelligent, contextual, and all of that kind of stuff. Then what are the additional things you can do that are absolutely amazing when you layer in the capabilities and the virtues of blockchain? I think we're going to see that coming, but not for a few years. I think we're seeing that. I think as Simon describes it, we've just discovered Ethernet, or networking computers together. And where do you start with that? Well, kind of within your own building. You just start networking things and using those capabilities internally. And then when you get to a network of networks, that's when the internet happens, and all of a sudden you're doing amazing things. I think people are looking at blockchain now and seeing the internet, but actually there's a long way to go there. People are running those internal pilots, those internal tests, and using sort of blockchain internally with a variety of in a variety of areas to really test out the model to see how it works. But it will come, and it will be there. And I remember once challenging Simon as to whether banks really can sort of create this sort of shared infrastructure, and he pointed to all of the shared infrastructure they've already created, everything from Swift and the payment systems through to sort of PayM and everything else. So there's a history of this sort of shared infrastructure, and we're going to see it really do some transformational stuff.
So I guess picking up there and thinking about incumbent banks in a bit more detail, based on your experience, on your team's experience, what are the biggest challenges currently facing incumbent banks?
Wow. There's three that I point to. So the first has to be business model. Clayton Christensen points to disruption being defined by disrupting a business model, and traditional sort of large incumbent banks have a real problem in a low interest rate environment with caps on interchange, with the CMA looking to cap overdraft charges and the sort of fees that can be charged to end customers, with fintechs coming along looking to bite off those high margin activities like remittance. So on one hand you've got that squeeze, that margin squeeze that doesn't look like it's going away. We might have low interest rates for a long time. On the other hand, you've got large cost bases of thousands of staff, hundreds of branches, massive organisations that have evolved and grown through the decades, a new competitors coming along in order to challenge that. So there's definitely this margin squeeze, this business model question as to how can that continue? How can that really survive? I think secondly is probably a cultural aspect. You've got again thousands of people and senior executives who have earned their way, rightfully so, within a particular way of working for again decades, and it's extremely difficult to put that knowledge, to put that worldview aside, and to start banking and retail sort of banking again, and insurance from scratch, from what are the customer needs, what capabilities do we have, and how can we deliver against those. So while at the same time understanding that Barclays has 24 million customers, so that you can't just innovate wildly. You've got a big old sort of customer set, and your national infrastructure, you're supremely important to the country. So there's a culture problem, and then I think thirdly is the legacy IT issue, which I've not met a senior banker who hasn't admitted that that's very much the case. There's rarely a business case for changing core architecture. You're always looking to add on new services, and the best way of doing that isn't to rip out what you've got, and to deliver something else, but actually to add on to what you've got. So it's a little like buying a really old house and knowing that you've got to live in it, and then knowing that you want to upgrade and add rooms. You can't really knock it all down and start again every few years. You kind of have to build on extensions, build on an extra floor, and unfortunately that leads to somewhat of a monstrosity of a house with little rooms, long corridors, and crazy plumbing, and that's where we're at. So it really is a project and program by program. Large banks have added on one customer view, online banking, mobile banking, bringing customer data together, had to layer on systems, which brings us to this point where there really are thousands of systems and tens of thousands of interfaces connecting these, everything from state-of-the-art new systems back to mainframes at the core. And that slows you down, that makes it tough, and that means something that for a smaller bank might be a £10,000 or £50,000 project becomes something that's 200, 500, £1 million for a large bank. So that's a tough place to be in.
Are incumbents facing the inevitability of continuing to patch IT issues, to bolt on new systems, new products, and kind of continue to limp along in this way, or is kind of fundamental regeneration possible at an incumbent institution?
that's something that at 11FS, we talk to a lot of banks about across the world. I'm not sure I'd characterise them as limping along. There's some pretty successful businesses out there, but they are facing changing, an absolutely massive enterprise to work in a new way on new systems against a new background of technology and challenges within a short period of time. And there are some really smart people and very engaged, motivated, teams working on just these problems. And so you get to a point where teams are looking at, is there some way of abstracting those systems, of adding messaging layers and building things on top so that actually you can replace the systems below? Can you really do core systems transformation? And that's a real question. And if not, can you then either build something new from scratch by the side of the bank, or as an additional offering to the market, or do you buy someone who's out there? And I think we're seeing a variety of those strategies playing across the world, of the changing internally, radically changing internally, building a new bank, or buy it, or looking to invest and buy. And it's really horses for courses. There's not one answer for every bank. So there are a lot of teams looking at this.
Well, I do like. I believe it's Unicredit in Italy who recently launched or announced the impending launch of a effectively wholly owned but completely independent bank, unfortunately named Buddy Bank, which will, I guess, be operational with its own banking license from the beginning of 2017, app only, which in a market like Italy is particularly innovative. And so it'll be very interesting if they're looking to pursue that sort of strategy that you outline of launching something new on the side and slowly migrating customers over as they're ready.
It's a hard path. I mean, I guess we've seen in the UK, First Direct, I guess, is a nice example where HSBC essentially wanted to deliver something different, but under a new brand. And it hasn't grown and massively over the last few years, but in terms of sort of customer satisfaction and arguably a great functioning enterprise, I think it shows the way there. I think that's it. That would be my preference.
One of the points you made before around what excites you in banking was related to PSD2, to open banking initiative in the UK, to API-based banking as a platform type models. It's very interesting to see what, for instance, now I guess correctly called N26 is doing out of Germany. Certainly what Fedor did. It almost looks like some of those banks, maybe N26 in particular, are beating some of the UK digital challengers to the punch. It looks like they're considering expanding over here. Certainly with passporting, they can cover the entirety of the EU very quickly. Definitely.
I mean, they were going a long time before the UK sort of digital challengers really got going. They've had growing pains, but they've got a good offering, and they are expanding and growing and definitely showing the way. Before then, I mean, you could look at Simple, you could look towards Moven. It's not that a lot of this stuff is new. We've just seen a variety of sort of challengers and groups grow, as we go. So it's a fascinating time. There really is a large banking battlefield of both the large incumbent banks. I wouldn't write off the smaller banks like Virgin Money, Tesco Bank, Sainsbury's Bank. You've got all of those sort of brand challengers. You've got the four new digital banks, and then you've got a variety of players like Monese or Curve, or a variety of fintech players who are sort of coming in, TransferWise, the obvious example, who don't have a banking license but are developing things anyway. So there's a lot of players who all have very different strategic benefits and positioning, who are making some really interesting moves. And I'm not sure anyone can really predict how the future's going to go. It really is a battlefield.
No, it's interesting. I mean, kind of pulling together some of the comments, some of the thoughts from the conversation. We've talked about how the incumbent bank business model is under pressure and may in fact be broke. Well, I don't want to say it's broken. I don't think that that earning a fair margin to kind of to perform the social service of allocating depositor capital to businesses in search of credit will ever go away. I think that's always a very sound business model. I think there's a fundamental social need for that. I think that where a number of incumbents have gotten is with having such expensive infrastructure, branch networks, personnel, that they effectively need to subsidize their business by gouging customers on things like overdraft fees, international transfer fees, in ways that certainly don't create value for customers and surely erode it. So the cost structures of incumbent banks and how even that default banking business model will develop going forward. You talked about with some of the API-driven digital challenger banks, Mondo, N26, and contextualization. You almost get away from that silo of the bank, which controls all interactions with customers and which into which funds go and out of which funds come, and you almost end up with a network, a platform type service instead.
Yeah, and Tom Blomfield, CEO of Mondo, has spoken a number of times about the marketplace bank. We're the sort of the end of the universal one-stop shop that tries to sell you every product they own, and the move towards very specialist companies, the specialist banks and providers who specialize in a particular providing a particular service obscenely well, and then connect to other providers in order to for them to deliver what they're amazing at. But I think what's missing there, and the interesting question, especially around the API and the PSD2 open banking sort of moves, are what business models are possible around that. Because I think on one hand you've got regulation, and you've got the regulator pushing for these new APIs and third-party providers, but on the other hand, if a bank wants to sell you a loan that it originates, that's fine. If they want to send you to a third-party provider, then is that advice? Is that guidance? There are some real problems with selling other people's or signposting other people's financial products. Yet with APIs, that's almost what we're looking towards. So I think that I think some of my colleagues at 11FS would say is we've seen the kind of the stick around open banking, but we've not really seen the carrot. How does this work? How can banks and providers really make money out of open banking and APIs without turning it into the 2020 mis-selling scandal, where all of a sudden, because someone's giving you a lot more commission, you're sending everyone to a particular API provider who provides peer-to-peer loans. There's some intricacies there. I don't know if you agree.
Yeah, I think that's a great point, and presumably it's even tougher for the end user, the customer, to understand exactly what's going on in an API linked backend that they may not have immediate visibility into. And I'd heard you guys discuss that point about the CMA in the recent report, kind of acting with the stick rather than the carrot. I think that's a fair evaluation. It's actually really interesting kind of stepping back and looking at this push toward PSD2, toward open banking. Certainly parts of it aren't necessarily competitive. This is government very clearly saying, banks, you as an industry need to do this. It's going to be detrimental to your business, but you need to do it anyway. And there's not necessarily proof that that's the right thing to do, that's what customers even know they want. It's almost debatable, I would say, as a strategy to be adopting at a national, even pan-national level as far as the EU is concerned.
Well, I think as in reference to the podcast, the 11FS podcast that we do, I think we discussed exactly that point. And I think part of the conclusion we came to was that, it really does almost create, two-speed banking. You've got the innovative, customer-driven, real-time, intelligent sort of services that can then connect via an API to an aging bank, which is not a place that a bank really wants to be. I did some consulting way back for the large telcos at the point where the iPhone was starting to take off, and they were worried that they'd quickly become pipes rather than becoming the platform that consumers use and love. And I think there is a question of this of a strategy for every bank around whether they will become pipes or whether they'll become platforms, and that whether the API connectivity, what that really provides, and where their brand ends up being surfaced, or whether they just end up being EE, O2, Vodafone, a little icon at the top of your phone, meanwhile you're using everyone else's app. So there are real questions as to how that works, and we've been doing some work with banks on just that. I think people define APIs as from the technology that underlies them, where in the end, if you look at them as facilitating end-to-end customer journeys between a number of partners on a particular platform, that opens up some really interesting question as to what end-to-end journey are we talking about, and which partners are we talking about? One or two man startups, or are we talking about major multinationals? And on what platform does that mean? We're talking about payments on Facebook Messenger, within the banking app, within a mobile payment app like Ping It. Where does this occur? So you suddenly get into quite an interesting space, and this is some work we've been doing, looking at that sort of strategic canvas of what end-to-end journeys, which platforms, what size of players, and where are you playing, and where are the biggest opportunities there. But that's very much a proactive approach to APIs, rather than the legislation says we have to provide these APIs, so here you go, here are the endpoints, here's the documentation, we'll just leave them there.
Well, I think that's a hugely important point with this kind of unidirectional mandate coming from governments as to the way that banks' business models effectively need to change going forward. A lot of incumbent banks, if indeed PSD2, Open Banking Initiative, kind of move forward in a non-watered down way, they become a reality in the near future, and the impact is meaningful, you certainly put pressure on the profitability of incumbent banks, which have importance in the economic, the political stability of developed countries. It wouldn't seem necessarily obvious that undermining banks' profitability to the point where they need to be subsidized to function as dumb pipes is necessarily in the best interest of society or government.
It's such a big question, and I'm in no way qualified to answer that. But yes, it's an interesting move on the stability of those of banks. And equally, there's also a really interesting there's an interesting niche around the fact that if banks become pipes by default, there are actually some players emerging who are aiming at being pipes by design. So you look at Modular in the UK, you look at Solaris, who I love in Berlin, who are really looking at that. We will be those pipes, and we'll be the best pipes you've ever seen, and we'll actually allow people to build businesses on top of what we're delivering. I think there's something interesting there that, does the market suddenly split to a high and a low? Do you end up with very much the banks and the third parties that are looking to dominate and provide gateways to personal finance, or SME finance for that matter, and then background providers some of which will just end up there by default, and some of which have been designed for that, which brings them great efficiencies and sort of a real aim at delivering just that kind of bank as a platform infrastructure, or bank as a service, actually.
No, that's interesting, and kind of bring it back around to what's currently happening in banking. So much has been kind of said over the past 12, 18, 24 months, disruption versus collaboration, competition versus partnership, and I suppose one potential outcome is incumbent banks as dumb pipes, and then almost a layer of fintech type neobanks actually interfacing with customers, but an approach that certainly both incumbents and fintech seem to be pursuing is that of collaboration. Let's say a part of me is skeptical about the motivations on both sides. Is it PR for an incumbent bank to partner with a fintech? Is it kind of a pie in the sky for a fintech to think they can sell into a large incumbent organization on the back of a proof of concept? But in terms of that overall strategy of collaboration between incumbents and fintechs, is that something that you think is viable in the near term?
I think fintech is. I was arguing with Anna Herrera the other day that fintech is such a broad term. This was her point, by the way, that it's really difficult to refer to it, because it refers to so many different types of businesses, and inevitably, if you're looking at something that focuses on risk scoring of customers, and if you can find something that really does it a lot better than the traditional risk modeling within a bank, then that's something great to sell in. You can bring efficiencies and connectivity. You can focus on problems that banks have. KYC, AML. We're seeing the whole sort of facial recognition or biometrics. Often delivered by fintech startups. Or I did an interview with Kabanka a few weeks ago, who were using a robo-advisor startup, to connect to their services. So inevitably, I think that there are big opportunities for fintech to connect to augment and to help large incumbents. But we get back in some way to the question of digital transformation in large organizations. If it's something that's peripheral, if it's something that adds on to the front end, or doesn't need core systems changes across 25 different systems, then that's going to be doable. If it really is a big integration, then that's a really tough ask, and it has to come with a big business case, because the cost of doing those kinds of integrations is so expensive. So there's some kind of comic strip somewhere, I'm sure, of there being two sizes of projects in a bank. There's the £50,000 proof of concept, and then there's the £5 million implementation. And the problem is that a lot of fintech collaborations would fit somewhere in the middle. So it's easy to get a proof of concept. It's really difficult if it's going to be a quarter business to do massive integration without it being a real game changer in terms of acquiring customers or saving costs. I think actually combined with that is the thing I often hear on the kind of fintech side is the length of time that procurement cycles take. So even to get one of those sort of £50,000 proof of concepts to go through the sort of KYC, KYB, due diligence that a bank would need you to go through can take 4 months in order for a month pilot to actually occur. So there are some problems. There are some rich rewards, I think, for those companies and startups that can make it happen. And there is definitely space for collaboration in that space, especially with people who have worked at banks, who understand what the problems are and can start putting together digital solutions for those. But I wouldn't underestimate the difficulties there.
Mm-hmm. Okay, great. Well, look, that's probably a good spot to wrap up. We've covered a ton today. Jason, I'm hugely appreciative of your time. It's great to get you on. You guys at 11FS do a podcast of your own, which is great. I've checked out a couple episodes. Very, very good.
Yeah, so that's you can find it on Stitcher or iTunes or whatever your podcasting preference is as FinTech Insider, or you can go to 11FS, that's the number 11fs.co.uk, and there'll be a link there to some of the episodes if you want to try it out first. Mm-hmm.
Great. Well, I would highly recommend that everyone check that out. And in terms of getting in touch with you, Jason, what's the best way for people to do that?
Either through the website again, or on Twitter. You can find me at Jason Bates, and send me your abuse. Send me why you think I'm wrong, and I'd love to have a chat.
Great. Well, Jason, thank you very much.
Thank you, Will. It's been a pleasure.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.